everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfield, and here are 3 important things to pay attention to for the upcoming trading week. Now, last week, what a great week. We had GDP numbers far higher than expected, which means we're back on track for growth. At least that 1 point data told us that. We had great housing data. We also had inflation data with the core PCE price index on Friday, which looked rather good, right? We didn't see a surge up in inflation, stayed right where it's at, which is a very good sign. Now that optimism vaulted the markets higher. Most of the major market indexes up over 2%. You had the Russell 2000 was up over 4%. So yay! Does that momentum continue into next week's trading session? I don't think so. Oh, why did I say that, Merle? Why would you say you don't think so? Let's have some optimism for our holiday week. That's exactly why I don't think it's going to carry through, because it's a holiday week, which means very low liquidity, and the real players are not there. It's 4th of July week. So Monday is a half day. Markets close early, and most of the major market participants are not going to be there. You're not going to have the full force of the markets there on Monday, right? There will certainly be some people manning the trading desks for the big firms, but most of the traders are going to make it a 4-day weekend. Take Saturday, Sunday, Monday, and Tuesday off and go enjoy life for a little bit and forget about work, which is what we should all be doing. I would encourage you, just take Monday and Tuesday off. Anyway, we come back from that on Wednesday, and there are a bunch of activities happening later in that week, but I want to talk about what's happening on that half day. That's right, we do have stuff happening on the half day, and it has to do with manufacturing. Now, the reason I find this one important is the latest GDP number was expected to be 1.3%. It came out at 2%. Big increase. Now, while that looked great on paper, and a lot of people going, yes, it looks so good, our economy's back on track. When you pull back the curtain and look at what made GDP go up so much, it was government spending was number one, shocker. But the things that were pulling it down, there were 2 components of manufacturing that said, we are going to pull GDP down. Now, if we can get those factors for manufacturing back up to just break even, not pulling it down, then we might have had a GDP reading of 2.1, 2.2, 2.3, something much higher, which would have been even more optimistic for our markets going forward. So long-winded, what are we going to talk about manufacturing? Well, there's this report called the ISM Manufacturing PMI report. That report comes out Monday at 10 a.m. Eastern Time. And what it does is it surveys a bunch of purchasing managers in the manufacturing space to get their sense as to are they optimistic or pessimistic on a wide range of topics within manufacturing. Now, as you can see on this chart here, there's definitely these ebbs and flows with regards to the ISM Manufacturing PMI and the optimism or pessimism of those managers. Now, really the worst spot here is back in 2009 when there was extreme pessimism. We saw a reading of right around 33. That's very low. And you notice that horizontal line there, that's at 50. So 50 is kind of the average. Above 50 means optimism and expansion and positive. Below 50 means contraction, manufacturing shrinking, and pessimism. And right now you're at 46.9, and you'll notice that we've been down below 50 for about 8 readings, 8 months. So this is not a very good number for us to see. The real question is, how long will we stay down below that 50 line? Will it be a prolonged stay down below, or do we start to see manufacturing creep back up and now become a contributing factor to GDP overall? And that number again comes out on Monday at 10 a.m. Eastern Time. Oh, but we're not done. We've talked so much about central banks and interest rates, and there are a couple of them reporting this week, so I figured why not move to that topic and look at the central banks around the world. We'll start things off with the Reserve Bank of Australia coming out with their announcement. That's going to be on Tuesday, just after midnight. Of course, markets are closed. Independence Day is not observed in Australia because it's not theirs, it's for the US. So they're expected to go from 3.85 to 4.1%, a 25 basis point increase in their Fed funds rate. That'll happen again Tuesday, just after the stroke of midnight Eastern Time. So if you're trading the Aussie dollar, there might be some opportunity there. And lastly, we have Canada. The Bank of Canada will be expected to raise at least 25 basis points. That will be on Wednesday at 10 a.m. Eastern Time, just after the markets open here in the United States after our 2-day holiday weekend. So not a lot of major data. There's no real earnings companies to speak of, very small, just a handful of companies reporting earnings. We do have the ISM Manufacturing PMI numbers on Monday. We also have some reserve banks on Tuesday and Wednesday, and it'll be a very light trading week for the U.S. markets. That said, I hope you guys have a fantastic 4th of July. Do something fun with your friends and family, and we'll see you guys next week on Money Market Must Knows. Take care.